I'm David Marison, a field specialist for OSU Extension, alongside with Bruce Clevenger, also a farm management field specialist for Ohio State University Extension. We'd like to welcome you to today's program. We do this on a quarterly basis. As the WASDE report comes out that week, we try to sit down with Dr. Seung-Kee Lee and just have a reflection on that report that was pushed out on Tuesday. Just for a few housekeeping items that we have here today. You'll notice at the bottom of your Zoom screen, there's a Q&A feature as well as a chat box. The chat box will drop some reports into, so if you want a question and want to ask that question to Seung-Kee, don't hesitate to drop that in the Q&A box, and Bruce and I will be monitoring that as we go along this morning. So if you have a question, don't hesitate to ask those questions, just drop them in the Q&A box. Also, as we leave today's program, as you exit the Zoom platform, it will take you to a survey, and we would just ask you to complete that survey as we prepare for our November 17th webinar. I'd like to mention also that we really appreciate the sponsorship of the Ohio Soybean Council. This program is brought to you today thanks to the Ohio Soybean Council. So, hey, Seung-Kee, we got a half hour to talk, to drink some coffee before we get out there. It's a nice crisp fall morning across the state of Ohio. But on Tuesday, we saw the release of the September WASDE report. So without further ado, let's just jump right in there. And let's begin with that September WASDE report that came out. Give us a quick overview of what you saw in that report on Tuesday.
Sounds great. Yeah, thanks, David. Let's begin with the quick snapshot, the busy table that summarizes the numbers that we see in the WASDE report. So first,
and I don't think I can hear you, Seung-Kee.
Okay, do you hear me?
Right.
Hello?
I can hear you, Seung-Kee.
Yep. Okay, yeah, sounds good. So this is the balance wheat balance table in the September WASDE report, and this is the first new crop estimates actually based on the objective survey. So this is like way more credible compared to August numbers that we have seen before. So and a couple of things I want to emphasize here as compared to last year, we expect to see somewhat smaller supply and demand, as you can see in the balance. But in this case, the demand reduction will be larger than supply reduction. If this projection is realized, this will be the first time that we see that the wheat ending stock increases since 2016-17 market, when we had about a twice larger ending stock actually. And the season average price is projected to decline by 15% compared to last year, landing at $7.5 per bushel, for two reasons, mainly because of Fed's monetary policy, and also at the same time probably this balance between supply and demand. So those are kind of the quick overview of the wheat, and this is, I think, a little more hot subject. So the corn and soybean. So let me talk about the supply side first. So in corn, the new crop yield projection is decreased compared to August, but the total production is adjusted up. And the hidden figure here is the harvested acreage. In fact, the harvested acres increasing effect on the production was bigger than the yield decrease effect in corn. Similar story in soybean with a different direction of supply move. So soybean yield was adjusted down by 0.8 bushels per acre. Although harvested acreage estimated for soybean was increased, the yield down effect was dominating, and the total production was adjusted down compared to last month. So that was what you see in the supply side. And when you're looking at the gray rows, we can see the USDA's demand projections for corn and soybean. Overall, except for the exports, all the demand sectors are expected to have a slightly increased consumption this year compared to 22-23 market, which is kind of a little bit of bullish assumption. But depending on how the export will go, seems to determine the direction of total use at the end. For instance, corn is expected to have a larger total use with a positive export change. However, soybeans total use is expected to be smaller, attributable to the smaller exports. So it is pretty clear the exports are the key source of uncertainty to us. And based on last week's USDA report on grain inspection for export, we have made a good headway in corn export at the initial phase of the market year, which is about 4% higher than last year. In contrast, soybean export has had relatively low inspection amount so far, around 21% lower than last year. So the current export projection seems to reflect the up-to-date inspection progress, and I think there is a possibility of substantial edits in these figures. And when looking at the state level corn yield, we can see which region had a good growing season this year. National corn yield is estimated to be 173.8 bushels per acre, around 0.3 bushels up from last year. And corn yield growers are expected to be one of the most, actually Ohio corn growers are expected to be one of the most successful growers this year. We are seeing 195 bushels per acre in Ohio corn production, and this is a record level. If this is the case in terms of yield, Ohio will take the third productive state following Iowa and Illinois this year. In addition, when looking at the map, you can see many states are blue, which can be a little bit elusive, I would say. Although the blue indicates higher yield than last year, we should remember we had drought in the western region and flooding in the southern region last year. So it's better to think that many of these states are just coming back to their trend line rather than a massive harvest. Although some southern states like South Carolina actually had a good harvest prospect even compared to their normal year. So, and when move on to the soybean, similar story. So Ohio soybean growers had a successful growing season this year. We are expecting a record level soybean yield of 58 bushels per acre, and this is again the third highest yield across the U.S. So considering that the East Corn Belt states have great yield prospects so far, both for corn and soybean, we can foresee pretty weak basis in Ohio in the next few months. And here is the recap. So so to sum up, we see the yield down, harvest acre up, both corn and soybean. As a result, the corn production is adjusted up because the harvest acreage increase was dominating, but soybean production is adjusted down because the yield decrease was more substantial. And the overall prices are expected to be lower. Corn $4.9 per bushel, soybean $12.9 per bushel, and wheat $7.5 per bushel. And speaking of the demand projections, they largely follow the past trend. Yet the export progress will be a moving target. So that is kind of the very quick summary of the WASDE report.
Great numbers, Enki, and it looks like, wow, Ohio, great quantity of a yield coming in, and I think farmers get excited about the yield potential in their fields on the quantity side. Can you speak a little bit to the quality of the crop in Ohio and then also across the Midwest?
Yes, so actually I also checked the crop condition, like crop progress report from USDA. This is the September, like the recent one, and like the short comment is Ohio crop is expected to be excellent in terms of quality as well as quantity this year, at least based on like up-to-date observations in the field. So this is when you look at this top figure, actually, this is the past trend, and the red line is 2023 line, and when you just match it to the right axis, these percentage numbers are indicating the good to excellent portion in Ohio corn. And as you can see, about 80% of Ohio corn is expected to be good to excellent quality, which is relatively high compared to our previous years even. But also when you compare it with the national average, when you look at the bottom figure here, the red line, 2023 is actually the national average, which is about like just 53%, meaning that 53% of U.S. corn is good to excellent condition now. And also, if we compare it with like state by state, good to excellent portion is just 30% in Missouri and 50% in Iowa, 60% Illinois, and 65% Indiana. So even like compared to other like Midwest, like very productive states, our like crop quality, corn quality seems pretty good. And if we move on to the soybean, similarly, Ohio soybean quality is also expected to be great. So as you can see, when you look at the top figure, around 75% of Ohio soybean is currently good to excellent condition, and national average of good to excellent soybean portion is just 53%, especially for the Missouri, 45%, Iowa, 50%, in Illinois, 65%, or a little less, 65% actually, and Indiana, 65%. So, so far, I would say Ohio growers have been exceptionally successful in this growing season, and hope that we are just keeping this trend at the end of the season.
We had a great question that came in on the Q&A, and it leads right into where we're heading next. And it really came about looking at that summary table that you shared. The exports, Sin-Ki, seems to show kind of a looming signal again.
Yeah.
Could you elaborate a little bit on that export prospect that we might be looking
Yes,
at?
yeah, I think this is a good time to talk about that. So first, this is actually 2022-23, like kind of the finalized accumulated corn export. And this like the blue dot at the end here is actually what I shared in my April coffee and grain talk. So that is the April WASDE report estimates. And when I was saying that, I said I'm a little bit pessimistic about whether we can reach that point, because considering the massive crop coming from Brazil, we may not even like reach to the 5-year average. And unfortunately, that was the case. So our final number is just like 1.5 billion bushels, or 1.6 billion bushels was our corn export in the 2022-23 market. And as you can see, actually, as of April, through the end of the market, so 2023 market, we barely made progress in export, and mainly because of Brazil, presumably. And this is pretty shocking because I didn't actually expect this much slow progress in corn. That was the case. So, and when you actually compare our like 1.6 billion bushels to the 2020-21 market's record, this is almost half. So, although that was our like kind of record level like export amounts, but compared to that, we just like got the half of the like crops, like corn, exported to the foreign countries. And speaking of the soybean, soybean was a little bit better, but still like we are behind of the 5-year average. So, and as you can see, not surprisingly, like as of like April or March, we actually couldn't make a big progress in soybean export as well. And certainly those are the timing when the South American countries are like harvesting and supplying their crops to the global market. So it looks like we are like severely affected by their like progress in the harvest.
And Sin-Ki, that trend might continue for the rest of this calendar year of 2023. Any potential highlights coming forth, or same trend?
Well, I think at least like it will not be as bad as like the end of the year, because this was just the timing that the new crop from the Brazil is hitting the market. So we kind of get stuck, and because they have a bunch of crops and then they really sell it in a cheap price. So probably will be better. But as you can see, the key point is then when our export trend or pace will lose the speed. So as you can see, compared to like 2000, like other years, this market year we see like pretty good start at the initial phase, but like right after the March, like maybe in our case, maybe 2024 March will be the tipping points whether we can have a successful export market or not, because that is the timing that typically the new crop from from Brazil and Argentina are coming to the market.
Hey, Sin-Ki, this comes back, jumping back to a question that came through the Q&A. So it goes back to your recap on the September report. Someone asked the question about understanding that government certifies planted acres in August. So where did the extra acres come from in this report? We saw movement both up in corn and beans. So maybe a little clarification on how the process behind increasing those acres.
Well, that I think that is first, I think some possibility of measurement error, I guess, because certified planted acre is, give me a second. So this is certified planted acres. So this is certified planted acre is actually kind of the baseline, and typically because of some weather events and other issues, harvested acre is smaller than that. And then the harvested acre is also like kind of, there is an estimate for the harvested acre, planted acre. They are usually somewhat different, and harvest acre is a little bit different and a little bit smaller. And then also now this harvested acre was kind of, okay, we thought maybe we will lose 5% smaller than planted acre as a harvested acre, but it turned out that, okay, maybe just 3% smaller than the planted acre. So that's how they updated the amount of harvested acre size. That's how I see these numbers. Okay.
Excellent. So there's a lot to that WASDE report, Sin-Ki, and so and a lot of information that comes your way. What are some of the other things that you're paying attention to as we look at grain markets today?
Okay, probably like one thing is, first, let me move on to this Brazil's record export. So this will be will be a continuous threat to U.S. farmers. So this is one thing I want to emphasize. Brazil is having a record export this year, and I mean for the past 7 months, this is actually not just covering the entire year, but when you look at this 2023 figure, this is just like year-to-year comparison for the first 7 months in each year. And I believe this figure explains why we had a sluggish export during the first half of 2023. And also, we actually had some issue, like we have seen some issue in Argentina production, and that was really severe like heat to Argentina farmers. And the reduction in Argentina production, given that our question initially was like, who will be benefited from the Argentina drought? And one thing we can learn from this Argentina drought case last year is the answer: who will replace Argentina's supply? In other words, which country will benefit from it, would benefit from it? And yes, it's Brazil. Okay, so Argentina needed to deliver their contracted crops. So they imported substantial amounts from Brazil during the first half of 2023. And in fact, Argentina is currently the second leading destination for Brazil soybeans, following China. So as you can see, there is not much room that like we can take when even like one of the Latin American countries are having some like weather issues, but easily like the other one is replacing. So it looks like their supply chain or like kind of supply system is getting more and more kind of hard to say consolidated, but they are kind of a little more like harmoniously working together, I'd say. Also, speaking of the largest U.S. crop importer, China, it has been replacing U.S. crops with Brazilian crops for a while, and it has become more eminent now. And China is likely to continue importing more soybeans from Brazil and possibly less from the U.S. as the U.S. crops are losing price competitiveness due to decreasing supply expectations plus a strong dollar. Of course, geographical reasons also explain this. And also, speaking of some other issues on my radar, I'd say, of course, maybe wild cards during this harvest season will be weather. This can obviously affect the harvest progress. So we are not seeing the final numbers. Our all the yield estimate and production estimates, harvested acres are still estimates, and these are kind of up-to-date information was used, but that is not guaranteeing that we will see these numbers or we will see that much crops in our bean. And also what I'm paying attention to, especially related to weather, is the river transportation can be an issue again. And other issues on my radar are commodity markets, like backsliding possibility, and cattle price is at its historical high, and the new farm bill. So let me jump into a little more details about that. So this is the water level in Mississippi River and Ohio River. So as you can see, this the left graph is actually the Vicksburg in Mississippi state, and the other one, Cairo, is in Illinois. So as you can see, they are like already in the pretty low level, so it's concerning. And actually, I could see like many people, experts in the meteorology are concerning about the possibility of drought or low water level again following last year. And actually last year we have seen the low Mississippi River widened the gain basis out 25 to 40 cents along the river, depending on the location, which cuts into farmers' bottom line. So this will be critical to Ohio growers as well. Speaking a little bit about the barge rate that I have seen, this is the barge rate trend, and I just kind of highlighted a similar timing compared to like other years. In fact, the barge rates are already climbing up, and these colored areas are the same time window in different years. So even though we consider the seasonality, as you can see, the increasing trend of barge rate seems quite a bit steep. So considering Ohio is having a good harvest, this issue will be the most critical one if it goes bad. So if the river transportation malfunctions, then the cash prices in Ohio can possibly plummet because of the locally access supply. And what else? So the other one on my radar is just markets backsliding. It seems we have some possibility that the commodity markets would make backsliding, which makes risk management even more critical. Then now the question is, what will be a good target revenue to be financially viable? So the graph shows the production cost per acre in several commodities. Based on like 2024 like forecast, the corn production is $856 per acre, and soybean production cost is $613 per acre. And based on the September baseline projection from the FAPRI at University of Missouri, the numbers are slightly above their projected. These the total cost numbers are slightly lower than their projected gross revenue. So it's kind of based on when we just compare their gross revenue and the figure that we are seeing, it looks like there's almost like very small profit that farmers can make. But also like that is like we have to take this into account. We need to consider a couple of things together. So this state office's analysis and FAPRI projection has somewhat like different considerations in terms of the expenses. So the figure we are seeing is actually incorporating all this like cash rental rates and fixed costs related to the capital assets. And this FAPRI baseline projections is just variable expenses, which is not really considering incorporating the cash rental expenses and the capital asset expenses as well. So, but overall, what I would want to say is, looks like we have to like keep this like numbers like checking again and again, because they are usually like changing along the time. So we'll need to we'll like need to better pay attention to these kinds of changes, so that what is our like good bottom line to make the financial condition in a good shape. So, and this is another like issue that is on my radar. So cattle price at historical high. This is my third item. And based on the September FAPRI projection, the current high cattle price will likely continue at least until 24-25 market year, because of the life cycle of cattle. But if we think of this upward cycle in cattle stock, like, because we are really at the bottom of the cattle stock, so probably we will have some upward cycle for the next 2 or 3 years, and this might make additional grain demand for feed. So I think the recovery of cattle stock will be a factor moving the domestic grain use in a positive way in the next 2 to 3 years. And then lastly, what I want to say here is this is the Farm Bill. And this is not actually, I don't want to talk about the Farm Bill because of the time, and because anyway, we are going to talk about it in the Farm Science Review. So this is more or less the advertisement. So although it is not directly hitting the current market, this will affect the rule of the game in the grain market for the next 5 years. So so I want to advertise the AEDE faculty will have a Farm Bill discussion session on the first day of Farm Science Review, which is next Tuesday, and the time will be 11 to 12, and the venue is the Ask the Expert tent. So please join us if you can make it. So I think those are all the items that I have prepared.
Zinke, I have to just put some ground truth into that. I'm going to ask you a tough question here about your thoughts on how much faith you have in the numbers that we're seeing, and based on all the things that could be going forward. But it's down in Louisiana over Labor Day, firsthand seeing the river levels as you get down there. That's hard to believe, right? After we went through a July where we hit 9, 10, 11 inches of rain across the state of Ohio, to think, oh, well, the river level is just fine. But it's something that we put out of our mind, being at the top side of that river system. So something to keep in mind, as well as there's been some fires in some facilities that could impact it. And of course, how we go forward. We were talking offline before we got on here, like, how much confidence do you have in Ohio's report that's out there, as well as the Midwest? I know my friends in Missouri, I was able to travel Missouri and Iowa this summer and seeing some of the drought conditions out there. Maybe as we get into the field, we're going to know a lot more as far as those crop conditions. So how much confidence do you have in what you saw, and as how the market has reacted or not reacted this week?
Oh, actually, market didn't react much, and the confidence is a tough question, obviously. Well, like, I
That's
cannot
why
say
we
that...
ask them, right? That's what we want to ask, the tough questions.
Yeah. Well, like, probably I would say like 70 to 80% of confidence, just based on the statistics. So like in the past couple of years, when we look at this like September WASDE report estimate and the final market numbers, we are seeing sometimes it's pretty close, but sometimes it's pretty different, because that is the key is actually the weather, like from now through the November. So this like maybe 2 to 3 months like time window, like weather conditions will be the key factor of changing how much like this estimate will be accurate or not.
And you talk about weather, and that may be a good segue to jump to Bruce, just to give a plug for the Ask the Expert Center sessions there at the Farm Science Review. Of course, we hope that we see everybody at the Farm Science Review next week. Stop into the Firebaugh building. That's where we all, from the farm management side for OSU Extension, will be hanging out, as well as the Ask the Expert. I know Aaron Wilson will be on that panel, Bruce, so maybe we can nail him down to give us that accurate weather report as we move into harvest, and then we can put that to our market. So Bruce, you want to say a quick word about the Ask the Experts?
Sure. The Ask the Expert is that interaction with the audience, the crowd there at Farm Science Review. It's a great place to grab a chair, grab something to eat, sit down, and engage with our experts for about a half an hour period. The AEDE panel is the exception to that. They have an hour to talk about, and rightly so, the Farm Bill for an hour at that 11 o'clock hour. Actually, we're going to, each of the 3 days of Farm Science Review, we're going to have the Ask the Expert from roughly 10 a.m. to about 3 p.m. each day. We're going to kick the Farm Science Review off with Aaron Wilson talking about the weather at 10 a.m. on Tuesday, next Tuesday at Farm Science Review. Sin Key's going to be there on Tuesday and Wednesday. In addition to talking about the Farm Bill, Sin Key's going to give these recaps on the market situations at the 1 o'clock hour. So from 1 o'clock to 1:30 on Tuesday and Wednesday of Farm Science Review. So again, we'll have him back, a special guest for us, and many, many more Ask the Expert guests on the lineup for this year.
Great. So we hope you all come out and see us. And it's amazing how quick a half hour goes as we get onto these coffee and grain markets talk with you, Sin Key. We do appreciate you getting on and giving us your quarterly report. We also appreciate the Ohio Soybean Council for their sponsorship of this program. And we hope that you will see us next week. Just as a reminder, as we exit today's, we're going to let you go take on the day. Hopefully you're done with your coffee and go take on your day. But if you want to check back with us, our next coffee and grain markets talk is going to be on November 17th. So same channel. We will be sending and pushing you out as a registrant. You'll get an update on the details, connection details for that. So Sin Key, Bruce, appreciate you being on this Friday morning, and we'll see everybody at the Farm Science Review next week. Thanks, everybody.